American elections aren't just about politics, they're about business. For entrepreneurs and online business owners, the impact of US elections reaches far beyond national borders. From stock market swings to currency fluctuations, global trade shifts to changes in consumer behavior, what happens in the US can significantly affect your bottom line. In this video, we'll explore how US election cycles ripple through the global economy and how savvy business owners can navigate this period of uncertainty to protect and even grow their business. Let's dive into what you need to know to stay ahead of the curve. American elections, particularly presidential elections, are often seen as significant global events. This is because the US is one of the largest economies in the world, and its policies influence international trade, finance, and geopolitical dynamics. Elections create a period of uncertainty that can send ripple effects across global markets. Investors, companies, and governments worldwide closely watch American elections to anticipate changes in US policies that might impact economic growth, trade agreements, currency fluctuations, and market regulations. This leads to volatility in stock markets, foreign exchange rates, and commodity prices, especially in the weeks leading up to the election and immediately afterward. During an election, the two major parties in the US, the Democrats and Republicans, often present contrasting economic policies. Democratic candidates might focus more on social welfare, regulating big corporations, and addressing income inequality. They may also propose higher taxes on the wealthy and increased government spending on social programs. In contrast, Republican candidates often push for tax cuts, deregulation, and policies that promote business growth. These different approaches can lead to varying impacts on different sectors of the economy. For example, industries such as healthcare, energy, and technology may be affected differently based on the policies proposed by each candidate. International investors, particularly those with exposure to US assets, tend to adjust their portfolios depending on which party is expected to win, as policies on trade, corporate taxes, and international relations can shift significantly. The stock market often experiences fluctuations as the election approaches. This is partly due to the uncertainty surrounding who will win and what policies will be enacted. Historically, markets tend to favor stability, and investors often prefer candidates who are seen as pro-business or predictable. A potential shift in leadership or policies can lead to short-term volatility. However, once the results are known and uncertainty fades, markets generally stabilize. That said, specific sectors can react sharply depending on the anticipated policies of the incoming administration. For instance, renewable energy stocks may surge if a candidate pushing for green energy initiatives is elected, while oil and gas stocks might decline. Another key area of impact is the US dollar. The value of the dollar is critical in global markets as it serves as the world's primary reserve currency. Election outcomes can influence the strength of the dollar, depending on the expected economic policies of the new administration. If a president is seen as likely to pursue expansive fiscal policies, such as increasing government spending, this could weaken the dollar due to concerns over inflation or a growing budget deficit. Conversely, a more conservative fiscal policy, with an emphasis on reducing the deficit, might strengthen the dollar. A stronger or weaker dollar has broad implications, affecting everything from emerging markets to commodity prices, given that many global transactions are denominated in dollars. Trade policies are another area where American elections have a profound influence on the global economy. US trade relations with other countries, particularly major economies like China, the European Union, and emerging markets, often hinge on the stance of the US administration. A candidate that advocates for protectionist policies, such as tariffs or renegotiating trade deals, may cause disruptions in global trade. For example, during the Trump administration, the US imposed tariffs on Chinese goods, sparking a trade war that affected supply chains worldwide and led to uncertainty in global markets. A change in administration can either escalate or de-escalate such tensions, which in turn affects global trade flows, company revenues, and the broader economy. Election outcomes can also have geopolitical implications that ripple through global markets. The US plays a pivotal role in international organizations like NATO, the World Trade Organization, and the United Nations, and its foreign policy decisions can shift global alliances or conflicts. Markets are sensitive to these changes. For instance, if a new president is perceived as being more isolationist, reducing US involvement in global affairs, this could lead to instability in regions that rely on US support or security. On the other hand, a president who strengthens international alliances might be seen as creating a more stable global environment, which could boost investor confidence. Global investors and companies also look to American elections for signals about the future of US regulatory policies. For example, a more progressive administration might increase regulations on industries like technology, pharmaceuticals, and banking, while a conservative administration may roll back such regulations in the name of promoting business growth. These regulatory changes can influence global companies that do business in the US or rely on American supply chains. For instance, European tech firms that depend on the US market may adjust their strategies based on the anticipated regulatory environment under the new administration. One final point to consider is that American elections can also influence global capital flows. The US is a major destination for foreign investment, and the policies of the new administration can either attract or repel foreign capital. Tax policies, in particular, play a big role here. If a new president lowers corporate taxes, for example, this might make the US a more attractive destination for foreign investment. Conversely, if taxes on foreign investments are expected to rise, this could lead to capital flight, where foreign investors pull their money out of US markets in search of better returns elsewhere. These shifts in capital flows can have a cascading effect on global markets, as capital moves from one country to another in response to policy changes in the US. In summary, American elections are far more than a domestic event. They have profound implications for the global economy, influencing everything from market volatility and currency values to trade policies and geopolitical stability. The uncertainty surrounding elections can lead to short-term market volatility, but once the results are clear, markets tend to stabilize based on the anticipated policies of the incoming administration. The world watches closely because US economic policies, regulatory decisions, and foreign relations impact businesses, investors, and governments worldwide. Therefore, the outcome of an American election often sets the tone for global economic trends in the years that follow. As we've seen, US elections are more than a domestic affair, they are key global economic events. For online business owners and entrepreneurs, understanding these shifts can be a powerful tool to make informed decisions, whether it's adjusting your investments, recalibrating your strategy, or spotting new opportunities that others may overlook. Stay proactive, keep an eye on the global market shifts, and leverage this knowledge to keep your business resilient and ready to thrive, no matter the election outcome. If you found this video helpful, make sure to like, subscribe, and share your thoughts or questions in the comments. Until next time, keep your business growing.